Conference will now be recorded.
All right, welcome everybody to this month's client support webinar. And of course, this is for September 2025, and today is September 17th, 2025. So great to have everybody here. Okay, so a couple things here I want to mention just before we get going. Go through a few administrational items. But before I do, Jean, I'm going to bring you on. Is there anything you want to bring up for this month?
Well, as usual, we always love when everyone joins us for Stock Analysis Friday, and that's on YouTube, and it's every Friday at 8 a.m. Pacific time, and that's where Bennett checks out everybody's stocks and their picks and gives them feedback. And that's about it. Back to you.
Okay, thanks. And also, too, I guess just an announcement. I think what we're going to do is keep the client support here on GoToWebinar. We talked
Yes.
about having it on Discord, but you know, it works so well here. So we're just going to keep it here and use Discord for announcements, kind of like blogs and stuff like that. And also a place where you guys can meet and talk and even share trades back and forth because you can post pictures of your charts. So definitely check that out. You know, if you want to know how to get to our Discord channel, just go to our website, and on the upper left-hand side, you'll see a little icon for the Discord site. So check that out. All right, so let me go through a couple other little administrational items. First thing, of course, to talk about are the risks involved in trading. Like I always say, without those risks, there are no opportunities, and that's true with pretty much everything we do in life, right? So it's important, though, when you take a situation like a trade or an investment, and there is risk involved, know what the risk is before you take the trade. Know where you're going to get out of the trade if it doesn't work, and also what the potential possible profit is that you're shooting for when you take the trade. I think both those things are important to have in mind. And also, too, any of the recommendations that we talk about here, please run those by your financial advisor or whoever manages your money. Just be sure they're suitable for you. I don't know your personal situation. They certainly should. And then finally, you know, we deal in a realm of probability, so past performance doesn't guarantee future performance. Now, if you need help in the arena of risk control, I've got two great money management books, but also too, the second edition, The Art of Trading, is pretty darn comprehensive. It's 608 pages, and it includes also chapters in there on risk control, as well as other forms of technical analysis that we cover. So that may be something you want to pick up. It's a brand new book just out in this year, okay? And then Survival Guide to Traders is published also along with the Elliott Wave Technique Simplified. And then that brings us to software. Now, part of the client support webinar is if you have any questions on the software or our courses that we have, ask away, okay? So that's the whole purpose of that. You have the ability here to either chat to us through the GoToWebinar chat service, and I'll see that, or you can actually also turn on your mic if you want when we start covering material and ask questions via voice. So however is easiest for you, you certainly can do that. And otherwise, I'll cover a couple things I think is important. We're going to be here together about a half an hour today. So we'll keep it moving pretty good here. All right, so we have software, you know, the ART software, the OWL, PTF, TLM, and ERI software, which is on the top row of this slide. And that is charting software. Now, some of you may have the ART, but you don't have some of the others. You can always buy the others later, all right? So don't feel bad about, you know, maybe you can only afford a couple right now. You can add the other ones on later. Same thing with the scanners, which is the next row down under that. And then, of course, the risk control software is under that as well. All right, so I just like to cover that before we get going because I think it's kind of important for you to know that. All right, a couple things I want to cover here. And again, if you have anybody has any questions there, we got a pretty good turnout today. So if you have any questions, feel free to ask away. Also, too, if you're watching the recording, you can also sign into our Discord channel and ask me a question there as well. So don't forget that. Or you can email it to support@traderscoach.com. All right, so what is in front of you here is NVDA. And what I want to just quickly go over is a couple things. One is on the slide to your left here, and let me just restart this. I kind of have trouble with this thing because every time I load it before I begin, I always have to seem to load it again. It's kind of weird. Okay, so that's my pointer. All right, so what I want to show you here is notice on this trend up, okay, how well the pyramids did in capturing these trends on the way up. Now this is a daily chart, and then this is a weekly chart over here. So we got two types of charts. And basically the idea is you just move your stop right up under the base legs of the new pyramids, okay? So it's really quite as easy as that. But there's also something else you can do. So if you enter on this first pyramid here, because this will form first, this one, even though it's in the first place, this pyramid here, it did not form until after both of these two smaller ones formed. You see that? Because they're inside. So one of the things here is when you enter in here on this pyramid, your stop's going to go right down under here, right? And when you know that information, you know a couple things here. You know your risk, right? And then at that particular point, you can use the risk to reward calculator or just the trade size calculator, if that's all you have, and calculate your trade size. And so therefore, because this is fairly close together, that's going to give you quite a chance to actually buy, for example, NVDA in this example, with quite a few shares because the stop and the entry is so close together. Now, the bigger the pyramids, okay, like this one, if you waited and wanted to just use this big one, notice how far away your stop has to be compared to that other one. And so your trade size would have to be lower to account for that further distance. So when you get actual pyramids that form inside a larger pyramid like that, I call these blue light specials. I actually grabbed that from an old mentor of mine, Bill Williams, all right, who I actually studied with probably close to now, 25 years ago. And he would always say, if you can get in earlier than a major fractal above that, then do it. And that gives you what, quote unquote, is a blue light special, which is an early discount. And so that's kind of the idea behind the opportunity of pyramids forming inside larger fractals like that, fractal pyramids. But in any case, one of the things I want to also discuss is, notice we got another pyramid here. So as soon as you get the next pyramid, you move your stop up under here, right? So that's kind of important. And then guess what? You get another one up here. Now, let me ask you guys a question. If your stop is now here and you're getting an entry here, you obviously have a profit on the first entry from here to here, right? So you don't have any risk in the trade anymore. You actually are sitting with a potential stop much higher than your initial entry. And so what does that actually allow you to do? Well, it actually allows you to take another trade, an add-on trade. And so what you could do again is use your trade size calculator and calculate, once again, the trade size based on your stop being right here and here. And so your second position, this would be your second add-on, would have a 2% risk roughly. And the risk on your first trade is now 0 because your stop is above the profit line, right? So you only have a 2% risk, but it allowed you to compound your position size. And that is one of the unique things about our pyramids, allowing you to do that, because the idea is you can safely add into a winning trade without increasing your trade risk. And so that's the way you want to do it. If you did it the opposite way, which is, let's say the trade went up here, came back down here, and you decided to dollar cost averaging in, or DCA, All right, the problem with that is your first entry is at a loss, and you're adding in another entry, and now you've got more risk, because if both of those entries get stopped out, your risk is going to be beyond 2% because you loaded it at a loss. So you don't want to do that. And instead, what you want to do is scale into profitable trades using the pyramids, where your stops are automatically put under the base leg of the pyramid. And you can really pyramid your way into quite a really nice profit doing that. So that's kind of, but you got to do it at the beginning of the trend either. You don't want to be doing it, after 4 or 5 pyramids form, because up in this area here, all right, you're getting into the mature part of the trend. So if you add in, you want to kind of do that in the beginning, right? Because of it, your chances of a reversal increase the longer the trend is in place, and you don't want to get caught, at least with one loss, at a loss that you could have prevented by entering in much earlier. So that's kind of a cool thing to look at. Now, one of the things, this happens to be NVDA, right? So one of the things here is, now notice here we're starting to get a rollover on NVIDIA. We got a red owl. We got a potential target that this thing is going to based on a Fibonacci retracement. And also, too, we still got the uptrend in place, even though it's in the target. And we have a green PTF and a green owl. So we kind of are hoping this thing will go up again, but we could come back down into this target area here before it goes back up. And notice how this target area here is almost exactly where this fair value gap here is, and order block here. So that's kind of interesting that they align. They don't always align that nicely, but when they do, it's kind of cool. So I would not be buying into this. If you're not in it already, you might want to wait for this thing to pull down into this target zone and be patient, which is the hardest thing to do in trading, and wait for that opportunity to buy in. So if you have any questions on that, let me know. But I think that's pretty straightforward. The other thing I kind of really quickly wanted to talk a little bit about is we get a lot of questions and emails from folks wanting to know what day trading is about versus the kind of trading they're doing now, which is position trading. And there is a difference, okay? You're often heard of, let me just bring up a whiteboard for this, and let's just kind of do this. So let's call it DT for day trading, all right? So some of the things on day trading that are similar to position trading is there are intraday trends, right? Just like there are trends on longer term charts, like the daily and even the weekly chart. And that's because of the fractal nature of the markets. And so those are possible to trade. And then you have scalps. Now, most people that aren't used to day trading, left out the L. Most people that aren't used to day trading think any trades during the day is scalping. And that's kind of not right, because you have intraday trends and then you have true scalps that you do intraday. And scalps are very short-term trades based off quick momentum moves, whereas trends are trends, intraday trends that go on for much longer than scalps. So the first thing you got to decide if you're going to make a jump into the day trading arena is, are you going to be a scalper or are you going to be a trend trader? And the two animals are different. Now, if you're going to be a trend trader, the pyramids are great for that. You can use all the same tools. If you're going to be a scalper, then I suggest the 1Bs and the 2Bs, which are the reversals, right? And also know a lot about price structure, fair value gaps, support and resistance lines, and things of that nature. I think that's really important for scalpers to know that. So here, I'm just going to put pyramids, all right? And here, 1Bs, 2Bs, and price action. okay, which includes fair value gaps, order blocks, and also support and resistance levels, okay, so that type of thing. So not as important really in trend trading, because in trend trading we go as high as we can until we're stopped out on the pyramids. But with scalps, you're taking that quick scalp, and when you are entering into a fair value gap, that may be an area for you to take profits. I'm also going to add one more thing in here, and that is going to be, I'm going to call this, let's see, order flow, OF, order flow. And there's a variety of different softwares you can use for that too. Some are simply the order flow price bars. You can also use volume, and you can also use bookmap, okay, for different types of order flow analysis. So the scalping is a little bit different of an animal and requires a little bit more practice in order to get that down. All right, now let's talk about the benefits of trend trading, even intraday versus scalping. So benefits obviously are you'll trade less, most likely, because in a trend, you'll be in it for a much longer time than somebody that has to take multiple scalps during the day. All right. However, okay, the cons of trend trading is that you have to be really good at staying out of ranges where the price action is not trending. So my recommendation is if you are in a trend channel, and the pyramids form inside the channels, don't take them. Okay, wait for the breakout and then take the first pyramid after the breakout. So for example, on an example, let's just say you had a big trend. Now, let me just tell you a couple things. When you have a big trend, let's say we had a big trend down, and now the market seems to be going into a range. There's a couple things you need to know here. And this is where price action comes into. Okay, so let's say we have something like that. So the range is from here to here, right? Now, in the beginning of the range, when you first spot it, it's usually after it's gone up once and gone down once, right? So you have 2 points up and down. That's because otherwise you're not really going to be sure if it's a range yet. So you have those 2 points. So draw those lines here at the top, okay? Call this resistance, and we'll call this support. If you get a pyramid inside here, don't take it. Wait for the price to break. Now, once you get really good at spotting ranges or channels, you usually can use the 1Bs and 2Bs because they usually form inside these channels. And what I like to do is wait until a 1B or 2B gets close to the resistance and close to the support, and then go ahead and take them. Now, I bet you didn't know this. 80%, and this is correct, 80% of breakouts in a new channel fail. So you could be, when you get up to this resistance area and you see a flip back to the downside, that, believe it or not, is a high probability trade, and exit in the middle, okay? Never take a scalp in the middle of the channel, okay? That's not recommended. But if you can take a scalp on the outer edges of the channel, whether it's a short or a long, obviously if it comes down here to support, you're going to be taking a long. If it goes up to resistance, you're going to be taking a short, right? So you can scalp that channel, but here's the interesting thing, because 80% of the time you'll be right, and then exit your trade in the middle of the channel. Okay, now if you want to move your stop to break even and see if you can make it to the other side of the channel, okay, but I have found in my experience just getting out at the middle is best, because I usually get stopped out at a break even if I do the other way. Okay, break even trades sound great, but I got to tell you, a lot of times you'll get out with a break even. Okay, and then if you'd left it alone, you would have made more money. So, you know, you got to, that's one of the things I have found. So break-even trades are not my favorite thing. All right, but this is something that works. So don't take any pyramids in here, but feel free to trade the reversals when they get close to the top and the bottom of the range. Now, one more thing I'm going to point out here. Now, let me just erase some of this stuff here. And there you go. Just take that out there and here. Okay. So one of the other things I want to go over here is that when you have 4 points, when you can count 4 assaults on the ranges, on the top and bottom of range, so 2 on the bottom and 2 on the top, then the chances increase greatly for a breakout after that. So once I have 4 points on the chart, I stop scalping. Okay. And so I think that's kind of something you should keep in mind when using different techniques in order to trade the intraday markets. All right, any questions on that? And what I would do is test this for yourself. You know, if you're interested, you know, you'll also see this on daily time frames. You just have to wait a lot longer. But if you look at some of the intraday time frames, you'll see these kind of ranges. All right, Patrick, I see you're here. I mean, Patrick and I day trade Tuesdays and Thursdays together, and we see markets go into these ranges all the time. And usually, if you get in the middle, all right, it doesn't work well. But if you get in, if you're patient and try to trade the edges of these channels, all right, then you'll have much better success. Or don't trade it at all if that's not your cup of tea, and then wait for a breakout of here before going for a trend trade. So I'm going to just erase this well, let me just erase this. I'll keep that up there. So let me just get rid of this. And now I'm going to erase it all. Okay. So let's just do this again. So let's say we have a downtrend. Goes into a range. Excuse my lines here. All right. So, you know, here's the top of the range. Here's the bottom of the range. 1, 2, 3, 4. All right. Let's say we have a breakout. All right. You have a choice here. You could go long during the breakout, but the problem is sometimes the breakouts fail, and if you don't have 4 points, you have an 80% chance of it failing. All right, if you have 4 points and you want to try it, that's okay. But a better way of doing it, I think, is let it break out and let it go. You'll probably get a fair value gap in here too. Then let it pull back, however much it wants to pull back, and then let it surge forward, and you'll get a pyramid in here, and then enter here for a trend trade. Okay, that will have higher highs and higher lows, and you'll have a more confirmed trade that way. Now, if you have a fair value gap down here, what I like to do here is you can enter half a position here and scale in the other half when it takes out the top of the fractal. That way you get kind of a situation where you're taking advantage of the fair value gap, and also at the same time you're scaling in on this entry here with the other half. Okay, so I'll leave that up to you and your experimentation and what you feel comfortable doing and how you want to handle that. If you're going to trade the pyramid purely as the way it should be traded, well, then you would wait for the break above the point of the pyramid to take the trade, and then your stop would go under here. Okay. The only advantage of doing this is it's going to give you a little bit lower cost basis there. Okay. If again, you can fill here and fill here. So you can play around with that, what suits your personality. Which brings me to the next part of talking about, you know, trading in general. you're going to find if you start the path of day trading, you're going to find your emotions are much more intense than when you're position trading. And there's just no way around it. Okay, I don't care who you are, how long you've been doing it, but that's the way it's going to be. Now, the longer you day trade, you get used to it, but it does take a long time to get used to it. Day trading is quite a different aspect in terms of handling your emotions. You know, to be honest with you, sometimes if you're used to trading a trend like this on a daily chart, it's really hard to stay with the trend intraday because you're always afraid it's going to pull back. And especially in the beginning, while you're waiting for new pyramids to lock in profit, you need to be able to control your emotions if you're going to be a day trader, trend trader, right?
Bearish pyramid trading point entry now.
Really important, okay? So keep that in mind. Now, the other thing too is prop firms. If you're going to trade with a prop firm, which is kind of they're a great way to get involved into day trading because basically you're not really risking any more money than just the price of getting the account right from the prop firm. So there are a lot of rules. I'm not going to go into those now, but there are a lot of rules associated with prop firms that make it a lot more difficult. And one of the rules that makes it difficult is called the trailing drawdown. And we've experimented with trend trading, and with prop firms, trend trading is really difficult unless it's a small time frame, because what happens is when you have a move up, like in a trend, let's say you have a move up, you have a pyramid, right? Then you have another move up, all right? When you are trading in the prop firm arena, if you let a profit go back down, that comes off your trailing drawdown. Okay, so it's very possible you could end up with a nice profitable trade at the end of the day. And yes, you'll have a profit in your account, but your trailing drawdown might be all messed up. Okay, might be low, critically low. Okay, so keep that in mind. I'm not going to go into the details with that because I'm not sure everybody is trading prop firms, but that's just kind of something you need to be aware of. So I tend to scalp more than I tend to trend trade on the prop firms, okay, for that reason. So when you take a quick profit, all right, that actually helps your trailing drawdown, doesn't hurt it, okay? So that's kind of one of those things. So that's something to be considered when trading the prop firms. And then also too, like a $50,000 prop account has a $2,500 trailing drawdown. So your account's really $2,500 because if you go below $2,500, you lose the account. So it's kind of funny. They call, everybody goes, oh, I got a $50,000 account. Well, not really. You really got a $2,500 account. Now, they do have different account levels. So if you're going to be a trend trader, I recommend going to a $150,000 account where the drawdown is $5,000, or even a $250,000 account where it's, I think, 15. Okay. So, you can decide. That way you can trend trade the larger accounts. But of course, there's other things to take into consideration as well. Your profit goals are much higher on those larger accounts. So it's worth mentioning, but it is a lot of fun, and I think it's absolutely fantastic. And if you love trading, it really is a fun thing to do. But you got to be patient with yourself because you're going to need time to develop your trading approach and the emotions to trade it. And it sounds so easy when you look at a chart to say, oh, I should have just gotten in here and gotten in there. But when it matters, every tick that it pulls back may cause you to have an emotional reaction of fear. And it becomes hard to stay in that trade, even though you should. Okay. So and everybody's going to handle that a different way. So you got to come to grips with that. And sometimes the best way to come to grips with that is just get in there, roll up your sleeves, and start feeling it and dealing with it. Okay. So and that's what can take time. Okay, but I just wanted to cover that. All right, well, that's all I got for you guys today. Okay, I wanted to keep it short and sweet, but share a couple of things that I think a lot of folks were interested in from the emails we got. So let me just open it up for a minute. If you have any questions, you can type it in the message area or use your mic. And if everybody's okay, we'll go ahead and just end the room then.
I think Ed might have had questions. Ed Grunheiser, is he here?
Yeah, I think I see him here.
Oh,
No,
cool.
I'm good. Thank you. I'm good.
Yeah. Hi, Ed. How are you?
I'm doing great. Thanks, man. It's been really informative. I usually don't trade this way, but it's still good to know.
Yeah. Okay. Good. Good. Yeah. I kind of just like to cover a couple things that we get some questions on each month as well. So if you have any questions, let us know and I can cover something for you.
Yeah, I'm good. I've gone through much of the past webinars, so it's kind of just trying to be creative to what I've learned so far.
Okay. Great. Great. So on trend trading, the hardest part is just remember, after you've had a big trend, markets usually go into a range. And in that range, you don't want to be trend trading. Just kind of keep that in mind. But you can scalp. Anybody else? Going once, going twice,
I knew you were going to say that.
3 times. Sold. All right, guys. I guess that's it then. All right. Well, thank you for coming. And we'll see you back here next month.
And we'll post this so everyone can watch the
Ye-
recording.
Yeah. Where do you post it, Jeannie?
YouTube.
It's gonna be YouTube. Okay, cool, cool. Hey, by the way, has anybody checked out our Discord channel? You can let me know in text chat too. Okay, cool.
Oh, I have. I've been on it once or twice. Uh, I forget the gentleman Perry. One of the other gentlemen was
Oh,
on
you
it.
came to Yummy. Yes, with
Yeah, that was
Perry and
young ones.
Al.
Yeah,
And yep.
that was important. Informative. I don't trade that way, but it was kind for them to share some of their insights. Very
Well,
kind.
what's interesting too, Ed, what you can do is there's a general chat there too, and feel free to post any trades that you do and you want to share. Okay.
Yeah, yeah. I only do like
We'd
two or
love to
three a
get the
week.
ball rolling on that.
Yeah, I only do maybe 3 or 4 a week, and I generally share it on the weekly call with you. Those
Okay,
the
cool.
are done.
No,
Yeah.
that's fine. That's fine. Yeah, so we got that tomorrow too.
Yes. Oh, Friday. Yeah.
But we will
Stock
see you.
analysis Friday, I think, is
That's
what
right. I
he's
like
talking about.
doing that. That's kind of fun.
Yeah. That's a great time of the week. Yes.
Good. Okay. Excellent. Excellent. All right. Well, listen, everybody, have a good weekend coming up, and I'll probably see most of you again tomorrow. So there you have it.
Actually, Friday.
Oh, that's right. Today's Wednesday, isn't it?
It
Oh, I
is.
keep doing that. I keep doing that. Okay, Friday. We'll see you Friday. I got the day trading room tomorrow, so that's what I get confused on. All right. So Patrick, I will see you there tomorrow. That's for sure. Very good. All right, everybody. Thanks so much.
Thank you.
All right. We'll see you
Have a
next
good
month.
month, everyone.
Yep.
Yeah.
Bye-bye.